Monday, October 13th, 2025, U.S. Market Recap. U.S. markets closed higher on Friday, rebounding from last week's sharp sell-off as the United States and China signaled willingness to resume trade negotiations and tensions in the Middle East showed signs of easing. Recent market turmoil began last Thursday when China announced rare earth export controls. President Trump escalated the situation on Friday, threatening an additional 100% tariff on Chinese imports and restricting exports of critical U.S. software starting November 1st. But over the weekend, the tone shifted dramatically. On Sunday, President Trump took to social media, stating that trade relations with China will all work out fine, softening his earlier stance. Markets responded with a swift rebound from Friday's selling pressure. Key administration officials echoed this more conciliatory approach. Treasury Secretary Scott Bessent said both nations are working to ease trade friction and confirmed that President Trump is scheduled to meet with President Xi in South Korea. This lifted investor sentiment considerably. China, while placing blame on the U.S. for escalating tensions, also called for additional negotiations to resolve remaining issues, further supporting risk appetite. Analysts welcomed the near-term de-escalation while maintaining a cautious outlook. Doug Beath of Wells Fargo noted, "The U.S. and China appear to be testing each other's leverage ahead of upcoming negotiations. Markets will remain sensitive to trade developments and other issues throughout third-quarter earnings season." Chris Veroni of Strategas said, "Fundamental tensions and uncertainties persist. A comprehensive agreement isn't likely anytime soon, but these comments have reduced fears of 100% tariffs or destructive export controls." While external uncertainties have eased somewhat, the U.S. government shutdown entering its second week continues weighing on markets. The CPI report originally scheduled for Wednesday has been postponed to October 24th, and other key data releases, including retail sales, face likely delays. This makes it harder for both markets and the Fed to assess the current state of the economy. As a result, all eyes are on Fed Chair Powell's speech scheduled for Tuesday. The S&P 500 surged 1.6% today, with technology stocks leading the advance. The major semiconductor index jumped nearly 5%. Broadcom soared approximately 10% on news of a multi-year custom chip supply deal with OpenAI. This rebound came just ahead of earnings season's official kickoff with major bank results. As trade tensions cooled and investors moved past bubble concerns around tech stocks, it confirmed that risk-on sentiment remains firmly in place. Mark Hackett of Nationwide observed, "Investors still show strong appetite for market participation. If this recovery holds, it reinforces the view that buying the dip remains an effective strategy." Earnings season officially begins Tuesday with Wall Street's major banks reporting. JPMorgan, Goldman Sachs, Wells Fargo, and Citigroup are all scheduled to release quarterly results. Bloomberg data shows analysts expect major bank profits to rise 6% compared to the third quarter of last year. Looking ahead to Tuesday, October 14th, 2025, at 6 a.m. Eastern Time, the U.S. September NFEB Small Business Optimism Index will be released. At 8:55 a.m. Eastern Time, the U.S. Redbook Retail Sales Index. For Fed speeches, Vice Chair Bowman speaks at 8:45 a.m., followed by Chair Powell at 11:20 a.m., Governor Waller at 2:25 p.m., and Minneapolis Fed President Collins at 2:30 p.m. Eastern Time.